Good afternoon.
Yeah, Ganavo boys.
We're sitting in London, but in separate rooms, like the usual when we travel vibe.
People must think we just don't like hanging out with each other.
Half true. The mission today, the day over here. So if you assume Sunday was the starting day, it's been a hectic 5 days.
It's been full on, still 2 days to go, but intense schedule.
I think we make this episode a bit of a UK theme. Jack, what have been some of the things that have stood out for you?
Oh, it's always what I love the most is always the cohort aspect. But the takeaway this year, the cohort definitely later stage. It's just great. Each year it seems we're refining the right type of founder who should be coming to the UK and seriously considering a market expansion.
Yeah. Such a good point. Like such a good cohort this year, really not just easy to manage and not just later stage companies, but also the fact that they're out hustling bloody hard. Like day two, we had some check-ins at the end of the day to see how they're going. And they'd already had some good wins with contracts and customers and even competitors switching over to white label products. Really good founders out getting it done.
Yeah, Holly with the mentoring platform managed to find the head of HR for Snowflake for the whole of Europe and got 2 hours with them and it's going to move to a trial.
Yeah, bloody awesome.
I think that's one of the things, right? It's fine to have a good idea. It's fine to have a good market. It's fine to have all of that, but it's actually hungry, hustling founders that do not waste the opportunity. And I think, the group has different energy levels and people are at different phases of the life cycle, but the people that we see disappear and go off and only come back at nighttime are the ones that are just making absolute hay while the sun shines.
Yeah, and it was one of those lines from one of the panels. You've got a full asset, not half asset over here. You've got to go full conviction, full throttle. And yeah, Holly in particular, absolutely embody it.
Yeah, another point is you can't substitute spending time in market and to come over here for a week, 2 weeks and the cost, they're maximum 10K, but like what you can actually jam and concentrate in that time, like so valuable.
Yeah, it's a really good point. Founders before mission looking at it going, that's a kind of significant investment, not just financially, but more so time. But inevitably all the founders that go through that experience always say, this is going to set me up to save time from being spent on the wrong things. And now gives me focus, but also just in terms of that clarity around go to market in the UK.
Been collecting a few little recordings from some of the founders. So how about I'll just play a few of these now just to A, give the listeners at home some idea of what happens here and B, talk ourselves up arrogantly.
I wanted to come on this trade mission to be able to test the UK market to see whether it's the next best fit for us and to validate some potential assumptions that we had, to look at our product, what we might need to do to adapt our product, and to ideally get a customer off the back of this.
I've had a lot of individual meetings with contacts and then also the meetings set up by Tribe and by Ant Health that the value absolutely would not have been obtained doing that virtually. It's just not the same.
I don't think it's possible that I would have learned this from Queensland or from Melbourne or from anywhere there.
Trying to do it from home just doesn't work. You need to know and feel and touch where you plan to go.
The connections that we've made, they're so willing to help you and give you warm connections into people that will help your business if they're not helping their business, and possible clients as well. So it's been great.
So I had a number of customer meetings this week. We did have a verbal commitment to a pilot, so very excited that we can hopefully pursue that once we're back home.
You foster a better thought process than with a bunch of people doing the same thing. You've got good people, but you've facilitated conversations. We bonded, whether it's socially or getting on the tube and going to some seminar somewhere.
I've really enjoyed this trip. I've met some fantastic people. The Tribe crew have been really helpful in making things happen. It's been great.
Highlight was definitely yesterday afternoon, the raising capital session, the candor, the directness, the real examples, people who are actually doing it and understand the game. Hands down, big bang for buck.
The clear favourite was yesterday's investors panel, the quality of individuals that were there and the facilitation of the whole panel. The content was really helpful for me to understand that landscape.
Dan from Safety Culture that have done the thing. And so hearing their stories, I think they're the most exciting, inspiring.
Addy was fantastic, getting a really fresh look at how the UK market works, both from a capital perspective as well as some learnings for founders. Dan from Safety Culture, just the 5 years taking ARR from $1 million to 20, the challenges that they faced and the learnings they took along the way was very interesting. You don't find many VCs that take the time to take cohorts overseas and explore new markets. So for me, a big thanks to Tribe Ventures.
Yeah, it's incredible. I couldn't recommend it more. You could do it twice a year, Don. You could do it 3 or 4 times a year.
If you're a founder thinking about going on this mission, applying for this mission, 100% apply.
If you are on the fence, I'd just say do it.
It's been a cyclone, a tornado of just new information and new learnings and new friends. In a word, unreal.
What was interesting is one of the favourite ones was the capital raising one. And I think this year, because the panel's always great and really appreciate the time that they put together, but this year we really went a little wider into venture debt, and David talked about some new facilities that are coming out that allow companies to actually take debt against IP, and that platforms are coming out to help get bank funding for that. So that whole how you approach the capital stack is a lot broader.
One of the things I love about coming to the UK is that insight over the horizon compared to the Australian market. And yes, a good insights there from David around the IP, but also a lot of discussion in that session around secondaries and the investor perspective on secondaries, and also on founder remuneration, like in terms of payment. What should founders be paid in the market from the investor perspective? And so that was a really healthy discussion.
Addy, as usual, took no prisoners.
How good is Addy?
Good.
He wasn't here to fuck around.
No. The theme of the week is we're not here to fuck spiders, and she embodies that. Really good cut through.
For those, what's Addie's full name for people to find on LinkedIn?
Addie Pinkster. So we can drop her profile in the show notes.
No, she was very good. And then Adam Sade from Octopus gave a really great VCs approach to everything from secondaries to venture debt, what kind of companies they look at. So we'll put some of those ideas in there as well.
Yeah, and great to hear from David Holston, again, active angel over here, particularly based outside of London. So gives a bit of a regional lens, but also spends half his life back on the Gold Coast in Australia. So has that great, awareness of the comparatives between Australia and UK as well.
But on a couple of the panels, it was interesting. Like, I think a lot of parts of the world, everyone's just really busy. We put on founders that have come to the UK and expanded. So what we could learn from them. We also organised some panels of some corporates of what do UK corporates need to see in order for you to become their suppliers and them your customers. And yeah, it was working from home means people aren't as dense in the city, but it means they're also busier doing other things. And one of the main points was, don't come with a vitamin. This has got to be a painkiller. People just do not have the time to look at nice to haves or small incrementals. It's got to be really big ticket pain points that you can cut through.
Yeah, very noticeable in the market this year, particularly compared to previous years. But Nicola Bates, who heads up the innovation arm of Boeing, particularly the Startup Accelerator program that they have, she was saying across the board in enterprise, what she's seeing is everyone's so busy in survival mode that unless you're offering something that solves a hair on fire for that immediate biggest catastrophe point, they just don't have time to talk to you. They're not interested. So I think it's a great lesson for founders that more than ever, you have to be solving a real problem in market. So great insight. And your second point there, Don, we picked up on, London feels quieter this year, like the city feels quieter this year. And hearing from everyone that post-COVID, people are still working remotely. And it's weird for Aussie founders to come all the way to the UK to then sit on a Zoom call to chat to a UK company because the person's working remote. But the feedback is you still have to be here in market to be taken seriously. So even though you might still be connecting remotely, you've got to be in market for that to happen.
Yeah. What's been interesting as well is people assuming before the trip that their product was just going to be plug and play. For some small number of the group, that has rung true. They don't believe their product needs big changes. But for some people, in order to solve the problems, there's actually a number of changes in the way they either deploy it, deliver it, sell it, and being aware of that before you come over, I need to get caught flat-footed.
Yeah, and Dan Joyce, who was on a couple of our founder panels this week, for those that don't know Dan, he was the first boots on ground for safety culture in the UK, and also part of Fable Foods over here, and had previously had his own business success and exit. But hearing from him about product-led growth and his perspective that the days of just purely having a product out live, driving its own sales are dead. And his point was you need some outbound sales or some other sales funnel activity to go alongside that for PLG to be effective.
I think the funniest bit of that panel, because often founders ask about product market fit and how do you get to product market fit. I think one of the questions was, at what point did you start selling in the UK? And as we didn't start trying, suddenly we had people buying our product, using it, and we hadn't even attempted the expansion. Like, that's a pretty good definition of product market fit.
Yeah. I think it wasn't even just customers using it. It was customers relying on it. So
yeah, spot on.
So we've got 2 and a bit more days. Then next week we got lunch with Ed from Octopus. Ed, I think the stats at the moment, his episode is the 3rd highest listened of the investor series because it is really great. But what I love about Ed is he is just a true champion. Have you seen him on LinkedIn? Anytime he's been getting a comment, he's then put our podcast that we did with him to say, hey, I answered on this. I mean, what a legend.
A legend. Thank you, Ed.
We will definitely at very least go halves in the lunch bill.
Yeah, I think the other highlight of the week for me is getting my voice back. So I lost my voice. What was it? Day one, like pretty much the first opening night at the pub with 130 Aussies, and it's still struggling to come back now on day 5. Just looking forward to being able to talk normally.
Oh, that's a shame.
We've enjoyed it, Aaron.
Thanks, boys.
But whilst we've been in the UK, it hasn't just been the mission. We sent a bit of an announcement out this week as well.
Yeah, so we formally announced our new venture partners. So we have 5 new venture partners joining our existing venture partners. So we put out a press release and a bit of news for the announcement of Vicky Forrest, who joined a while back, joining Adrian DeMarco, Mick Dempsey, new venture partners, Jason Seed, Chris Milligan, Elizabeth Varley also come into the mix, and Samant Data. Good crew, all here to help more of our portfolio companies scale.
At about 11 last night after the cohort dinner and a few drinks, one of the people came up to me and said, what the fuck is a venture partner?
A venture partner, the role can be defined anyway, but for us, it means someone who helps a portfolio company, so portfolio support. They also provide deal flow referrals. They are individuals who are out in the market, seeing a lot of companies, working with a lot of companies, and referring them to us when there's a fit for our investment thesis. But also investor referrals, so introducing new investors into our syndicate. And finally, for us, because we are a little bit different, they support with our mission. We've got 3 of our venture partners with us here this week in London. When we go to the US later this year, we'll have another 3 with us over there. So they help build those connections and that outreach piece, as well as helping the companies.
Yeah, having a chat to them last night over dinner, it's just really, really excited to have them on board. The work that they're going to do with the portfolio companies is going to be awesome, and it's part of building our tribe, I guess.
Yeah. And just good humans. Like, I think it's like we say, the reason Tribe is on the label, as it says it on the label, is that it takes a village to raise a startup, and this network just adds a ton of value for the portfolio and for us.
So I'll just throw up it's a bit early to get to Sharts. So this isn't Sharts, this is actual charts, because these charts I think have some informational value, but there was some surprising stuff in one of the Tech Week presentations just about the UK market. And so one of the things I found really interesting, so this data is for the last 10 years. It says we have closed the gap with the Bay Area at early stage and now have a real opportunity to grow at breakout and scale up stages. And startup rounds of 0 to 15 million in 2023. In the Bay Area, there was $4.5 billion of capital deployed in those early seed rounds of 0 to 15 million. But in the UK, it was 4.1 billion. Pretty bloody close. And so the point here was that the UK is actually very close to on par with the US Bay Area, whereas I think a lot of people would think that the Bay Area is miles ahead of anywhere else, but that's just not the case.
Yeah, and bringing groups over here for the last 9 years, we just see every year that gap close and close and close. And I think it was last year they were talking about the UK leads the world behind the US and China. It's just an interesting phrasing. But now we're seeing that gap just closing. And at that early stage, presumably that will now translate to the later stages. We'll see if that plays true, but super interesting stat.
Yeah, and for the later stages, the UK then falls behind because it's obviously not as mature. The Bay Area kicked off, in the 70s? So it's got a head start. So the UK for 15 to 100 mil is at 7.1 billion versus the Bay Area at 14 billion, twice as much in the Bay Area. And then the 100 mil plus club, UK is 7.8 billion and the Bay Area is 35 billion. So it's just it's just way ahead. But for the founders that we play with and the companies we look at, it's actually a really great play. And that's on the back of 155 unicorns.
And wasn't it something like 50% of those unicorns reach unicorn status in the last 3 years, and they're holding unicorn status? Like, it was interesting to hear that there hasn't been the same fundraising downturn that we've seen elsewhere. Obviously, valuations have shifted, but most of those unicorns came out in the last 3 years.
And this was an interesting chart. So this is the VC investment into the UK startups. And from 2013, it was about 2 billion. Then it's risen just before COVID to 15 and 16 billion. So really great growth. Obviously, COVID happened and that just jumped to 37 billion. But what's interesting is in 2023, we're still above the previous highs before COVID. So we're at 19 billion versus the previous high of 16 billion. So when we look at a lot of other charts post-COVID, the hangover has actually been driving the result below the point before COVID. Whereas here in the UK, it's actually been able to maintain trend and is above where it was before COVID came. So again, another demonstration of the maturity of the ecosystem and the amount of capital there to play with.
I think the other interesting thing for me is the stat that over 40% of the UK's unicorns actually went through an accelerator program. I don't see that elsewhere in the world. And I wonder if that's attributed to the fact that most of the accelerator programs over here are actually corporate backed. Like, they're actually run by, or they're not run by, but they're typically sponsored by a corporate who then gets quite involved in the program and ends up ultimately being customer and investor. But interesting, I just don't see that same statistic with accelerator programs elsewhere.
So whilst we've been here, whilst it's felt like a bit of a bubble flying in and concentrating on this, the rest of the world seems to continue to be going from strength to strength. And Nvidia crossed the $3 billion club.
Wasn't it $1 trillion club?
That's what I said, didn't I?
No, you said billion.
Oh God, I better put the stuff away. Yeah, let me put up this chart here, because this is an infographic for people playing along at home. And it starts with how their revenues are broken up. So $22 billion of data center revenue, 2.6 billion of gaming, 400 million of professional visualization, 300 million of automotive, and then other stuff is like 100 million. That equals a total of $26 billion of revenue. Their gross profit is $20 billion, 78%. This is a hardware company. The cost of its revenue, 22%. Operating expenses goes off for $3.5 billion, leaving operating profit of $17 billion, an operating profit of 65% margin. We've got a SaaS company that at the moment doesn't have 65% gross profit, let alone operating profit, which then leaves a net profit of $15 billion, tax of $2.5 billion, and $2.7 billion spent on R&D. This is just an absolute beast.
A hardware company to achieve those sorts of margins, profit, far out.
We do have a hardware company in the portfolio, and I think we need to be forwarding this on. And
yeah, we will. We've got two in the.
Asking why
you're not hitting these gross profit margins.
There was a post by Jesse Felder on Twitter. Over the past 32 trading days, Nvidia has gained more than $1 trillion in market cap. To put that in some perspective, the 6-week gain is greater than the market cap of Berkshire Hathaway that Warren Buffett has spent 6 decades building. Wow.
That is phenomenal.
Not all, I haven't put this in the notes, so you'll just have to roll with it, but it's not all beer and Skittles with valuations. Carter is relevant to this industry because cap table management and a competitor to our company, Cake. Shout out to the Cake guys. They've just finalized a secondary sale at $2 billion, which is exciting. If the last valuation of 2022 hadn't been $8.5 billion.
Oh, that's a bit of a drop.
Listeners may recall there was a big shit fight where Carter was found to be taking information from its cap tables and trying to proactively create secondary sales without the permission of the companies. And that led to an absolute stink, which we're grateful for because Cake was able to capitalize a little bit. I think it was a bit knee-jerk, them just saying, oh, we're never going to do secondaries again. No, it's just don't behave that way, but be better. I don't know why they had to run off and...
Sure. Let's cut the arm off this potential new stream to the business because we screwed up how we execute. It just doesn't, it was a silly move.
Yeah. So keeping on that valuation theme, Yotam Rosenbaum did a post talking about YC valuations. Quite often people hear of pre-seed valuations coming out of YC and go, holy shit, that is a big pre-money. But the point that he's making, he says, it's true that YC companies raise funds at a premium valuation, but this is completely justified. YC startups deliver premium results. They estimated that the accelerator's 2011 to 2016 cohort generated approximately 160 billion in exit value through to the end of 2022. Approximately 5.4% of all the startups have become unicorns. And over 2010 to 2015 period, Y Combinator's rate of producing $100 to $500 million startups was nearly 10%, 9.2%. That is an environment that produces some bloody good results.
Absolutely. But then also conversely, you could have invested in 95% of the companies gone through YC. And if you'd missed that other 5%, you would have missed every unicorn.
But I think that's what correct me if I'm wrong, that's what they're doing. And they're trying to provide this value. Well, portfolio approach, if the entire environment is producing it, don't try and be too clever. Put your dollars in. Don't try and pick portfolio approach. It's the same with Brisbane Angels. The ones that do the best are the ones that aren't that clever, meaning they don't try and pick too much. They just go, okay, the group broadly has really great results. And that's why we have a thing called Angelmatic, where you get automatically invested if the group invests. So you can piggyback on that. And I think he's right. We're in the process of looking at one that's a YC company. And I think it was Vu Tran of Go One often says YC is just something that makes, raise your horizon, lift your eye line. So you start to think just infinitely bigger.
Yeah, absolutely. And it's showing in the stats, right? Look at those stats. Phenomenal.
Jack, what was the one that the story you heard this week? The rent?
Yeah, Daniel won't mind us sharing it, will he?
Just don't use any names.
Yeah, so the company was a loyalty rewards platform for renters. 22 months in the game and blown out to 200 million ARR and a $3 billion market cap.
From what was the entry?
They got in at the Series A at a $60 million valuation.
Under per year, 60 mil, a billion. It does happen. Although we were talking, if someone pitched to us, we're going to incentivize renters paying their rent, we just say, the fuck, they have to pay their rent anyway. Why do they need it?
Yeah, we were chatting how if we'd seen that deal at that val, we would have more than likely passed.
In our defense, it's B2C. For the investors listening, if it was a B2B play, we would have been far more intelligent. Let's move into some local news items. There was an article last week by Adam Bubb from Startup Daily. I had significant imposter syndrome, 3 founders on the community that's been critical to their success. And so this is an article that talks about the 3 founders, Rebecca Dredge of Kiddo, Fabrizia Roberto from Covered, and Henry Bolton from Euphoria. Now we know from Fabrizia, or Fab, as she gave us permission to shorten it to, she attended one of the offsites. Was it last year?
Yeah. Geez, I've lost track of all time. It was late last year, November. Shout out to Fab.
She's a Brisbane Angels investment, her business, which is an insurance tech. And whilst I don't know Rebecca, I have you, Kiddo. When Maggie was on her way, I was pretty sure that I was going to need to hire 5 au pairs, a chef, driver, because I wasn't sure how the hell we were going to get through this. But in the end, my wife vetoed any assistance. The app did have a lot of people you could find to help with your kiddos if you so chose.
Having had au pairs for about 6 years, they were incredibly handy. And I'm back in that one set of, we need an au pair again.
Not for the kid. It's just helped me.
Exactly.
I just thought this article's relevant because it talks about imposter syndrome. I think it's relevant to the trip here again, in that, as we mentioned in the earlier part of this podcast, the mission groups tend to split into those that don't let anything hold them back. They get out, they make opportunities happen. They're just out there, versus those that internalize probably a bit too much, don't know where to start, fear getting the knockbacks. It's one of those things that just drains unnecessary energy and it's going to cost you the ability to be successful. And when whatever founders need to do to unpack that and get support to resolve it so all their energy can go outside is what they got to do.
Yeah, 100%. And it's very natural for founders to feel imposter syndrome because every day we're called upon to do something we haven't done before. And you don't feel qualified doing something new and juggling so many things, but it can be a driver. And like courage, you just got to feel the fear and do it anyway, right? I was going to say, this article reminded me of the comments by Addie on the investor panel this week about the L-bag, the laid back Aussie guy. And she was referencing a particular Aussie founder she knows and just how our Aussie nature, we're very laid back, we're very kind of casual. But she was making the point that he's actually a gun at execution, but because of his style and the way he comes across, people weren't taking him seriously in the market. And she had to say to him, look, you need to communicate differently. And Chris Milligan, one of our venture partners who joined us last night for an event here, he said the same thing. Like, you, as an Aussie coming to the UK, you've got to learn to be doing all this virtue signaling and credentialing and dropping these little name references or logo references or experience references during your conversation. And I think, touching on this imposter syndrome piece, it's a hard thing for Aussies to do, to actually speak ourselves up. It's not naturally for us, and we tend to react badly when other people do it. But in a market like the UK and in the US, you have to. You've got to in order to be taken seriously.
Any perspectives, Jack?
I've got nothing on there.
Jack's had a big last night.
Does he remember it though? That's the key question.
I do, yeah. I definitely do.
At this point, we should acknowledge to listeners that we recorded the first part yesterday and then ran out of time. And now we're recording the second part today, but it's early in the morning after a fairly sizable night for a few of us. I have a feeling this may be a tale of two podcasts. What's interesting, so RCL or like ACS and all of the things, correct me if I'm wrong, they've moved to a full virtual it's a model. There is no face-to-face community and it's all done online. I'm really interested to see if that actually survives.
Oh, look, me too. That's the Brisbane RCL has shifted. The ACS labs in Sydney are still running and they still have their Sunny Coast space. But yeah, look, I've seen this play out before. I can't say I've seen it sustain once switching to virtual, but look, good luck to them. I hope it does.
Yeah, no, RCL for a long time has been a really strong part of the ecosystem. So hopefully they can resolve it. Now, this is the most tenuous segue in the history of the show. I thought it was important that we at least, do some capital raising announcements. And it was last week that Psylo closed an $8 million seed round for psychedelic treatment. So what Psylo is, it's a biotech that has announced its first close of $8 million seed round in its development of the company's flagship psychedelic treatment for depression and other mental health disorders. The tenuous segue is that if you do enough mushrooms, you'll get rid of all of your imposter syndrome.
Yeah. Good segue. I like it.
I don't know. That's all. Sydney-based Psylo said that Psylo 100X distinguishes itself from the first generation psychedelics by eliciting neuronal remodeling without the hallucinatory effects. So what's interesting is this is mushrooms without the hallucinations, and it's going to be interesting to see if the benefit that physical experience often gives people still flows through if you don't have the experience. But
yeah, that's super interesting, isn't it? Because I would have assumed that the hallucinogenic aspect is what gives the benefit, but maybe there's some other chemical process going on there.
And the only other tenuous segue to the mission is that in London, being a European centre, there's a lot of non-alcoholic beer, a lot more than Australia, and it's on tap. In Australia, you have to, you ask for it and you're like the pariah. Here, it's like alcohol is disappearing, but through WhatsApp, mushroom chocolate just seems to be the thing. And a lot of people are just leaving alcohol behind, and low dose of these kinds of things is what the Europeans seem to be moving to.
Yeah. Look, in Germany, I can't say the experience was reduction of beer or non-alcoholic beer increasing, but legalization and increasing microdosing was really evident.
I think in Australia, there's a similar trend in terms of alcohol. I feel like everyone now is drinking less alcohol and everyone's more conscious, especially people my age.
So then what happened last night, Jack?
Yeah, I got to keep the trend.
Yeah. And it's interesting, this trip. I think as the companies that we bring on these trips become more mature, more revenue, like there are companies here with one of them's got 1 million users, the vibe becomes different. For a start, people are out hustling a lot more because they've got infrastructure and relationships. But as we were discussing, we don't have the resident pissheads and the hardcore larrikins that that sort of lead the group astray a little bit. This has actually been a really high intensity mission where the majority are out getting customers and growing businesses, which is great and good for our livers, but it's just interesting that it's a slightly different vibe each time.
Yeah, I put it partly
John,
down to the...
and John, if you're listening, we're talking about you, buddy.
Hey, John. I put it partly down to the amount of pre-mission work we did this time, like setting that tone, but also it's been good for our mission bar tab, like for different events where money's gone on the bar. Geez, it's really lasted this year.
On one of them, we had sponsors, they're putting $600 or £600, and I thought, for the size of the group, that's going to last 14 minutes. And then next minute, we're having to try and drum up people to...
2 hours later, I think we're halfway through it.
Now, again, with the theme of expansion and Europe, Deputy, who we've spoken about a couple of times, which reached unicorn status. Deputy is an HR platform for mainly deskless workers. It's eyeing millions of US and British workers in its expansion. One of our cohort, Holly, who's in HR tech, she went to an HR tech conference and she said that at the Olympiad, it was a stadium filled with HR tech companies and platforms from all over the world. For a start, for founders, those conferences are a great place to go and network and find relationships, and that's where she met some really key people. B, I just find it fascinating now in the world of SaaS that just in HR tech, we have enough companies to fill a stadium. It's just such a competitive environment, and man, you've got to have a differentiated product if you're gonna float to the top.
Yeah, absolutely. Shout out to Holly. She's a machine. Like I shared that in the Slack channel, that event, and she was just on it out there and hustling the room. And first day made really good customer connections, but then backing it up second day. But yeah, this is a thing for founders back home. It's just the scale of an event like that and the access that you get to customers, but also competitor analysis. You get to see what everyone else is doing. You get to see the trends in the market. You get to see how people are positioning themselves. To try and achieve that back home versus get on a plane, attend something like that. And the knowledge curve, like the learning curve, is just phenomenal.
When you're at those events and you start talking to someone and you realize that they are neither a customer, an investor, or whatever else, I'm going to go get a drink or I need to go to the bathroom has to come very quick so you can keep moving around that room.
Yeah, we were upskilling the founders in the pre-mission workshops on how to leave a conversation quickly.
Yeah. Now, to round it out, that has connection again back into the mission. We did a capital raising session. Been working with the cohort because a number of them are looking for funds. So inevitably, we spend as much time as we can looking at their pitch, looking at what investors to approach, doing introduction to investors if they're not in our particular remit. And there was a blog that Alan Jones put out, some advice on email pitching to investors, which I thought was interesting. He's broken it down into a few headings. Videos are sometimes an investor deterrent. Then you don't need to attach a deck. When you attach your deck,
his point there is about putting your deck on a site or platform where you can share a URL without hitting the Google Drive issues of someone not getting access or some sort of friction point of a massive email that gets blocked a massive attachment that gets blocked by email.
And then the third one was repeat the deal terms, constantly repeating the deal terms because investors see hundreds of deals a month. We ever had a pitch by video, a pitch deck by video?
We've been sent a recording, like a Loom recording reading of a deck. What I'm yet to see is someone just a short little video of, hey, I'm Aaron, I'm the founder of this, and here's what I'm doing. I'd actually quite like that, like the quick little rapid fire. But the problem, to Alan's point in this post, it's getting that really short, sharp. And that's the problem is, yes, video would be great, but when it goes wrong or it's a waffle fest.
Founders are so passionate about their product and you say, okay, give us the 1 minute pitch and before you know it. But yeah, you're right. Here's the deck and whatever else, and here's a 45-second, I'm Don. I'm really passionate about this space. This is what we're doing. This is the traction. In the deck, you'll see this. We're raising some funds to go and achieve X, Y, Z. I'd really love to have a discussion with you. Like, just show us your energy. I mean, you're on the receiving end for a lot of these. What were your thoughts on some of the ideas here?
Yeah, I agree with your comments. Like, it could definitely go right, but more than likely to go wrong. But I like pitch decks. Like an intro pitch deck should only be 10 slides, make it high level. Because the goal is only to get a pitch call. So that's the only goal of the initial outreach. But Aaron, you've been experimenting with a few short videos and you've had really good feedback. Do you want to expand on that?
Yeah. So in terms of when an investor signs up to our syndicate, we get a little notification. And for me, it's been a practice of just picking up the phone, recording a little video, just, hey, John, thanks for signing up to the syndicate. I'm Aaron. I'm one of the co-founders. Really excited to have you on board. Here's what we look at. And then if there is a deal upcoming or something in the works, like giving them that kind of context, super short. It ends up about 30 to 45 seconds, but it's personal and there's always a response. When I was trying to just pick up the phone and call them after they signed up, they obviously don't know my number. They're not answering, highly selective of filtering calls. I do the same thing. Email response rate's really low. Even text response rate's really low. But that little video, really effective. Just gets cut through.
So like I could imagine we schedule a call and a founder sends us out 30 seconds in preparation for the pitch call. Like it'd be a great thing. You know that they're like super excited. They're really well prepared. And that could be a little trick to stand out.
Yeah, I like it.
In terms of the deal terms, I find it a little bit intriguing sometimes when they're at the stage of pitching or whatever else, but don't have deal terms, or we haven't worked that out yet, or they haven't. It's like, well, part of evaluating whether we want to take this forward is if it's a good val and it's reasonable and your use of funds are functional, that's part of what's going to make us want to engage. If you're still floating around working that out, we can't really make a decision as to whether it's something that we want to look at further, and therefore you've potentially shot your bolt.
Yeah, I think that goes back to what we spoke about earlier on in this episode, like dive and anything. If you're going to go out to market and raise capital, make sure it's well polished and you're sharp and you can get on it. Otherwise, it's just going to be about reflection. Because every pitch call is just an interview from us to you.
Yeah, before our most recent cap raise, like going back mid last year, I remember Salvi asking what our terms would be, blah, blah, blah. And I gave a vague answer. He's like, fucking hell, Berkby, just make a decision. And I think that's the point. You got to be clear. You've got to have some conviction behind what you're doing. It can always be a discussion later with the investors. If they don't like it, whatever else, but make a decision, put it out there.
Yeah. And then just before we get to the Sharts and relevant for the capital raising panel we had here and just the state of VC and investment, Michael Jackson, the venture capitalist, posted some data showing that 13% of VC firms aren't planning to raise another fund next year. But he made the point that it's going to be far more that actually won't raise the funds. And he put some data between H1 and H2 and just the increasing number of planned fundraisers that have been pulled. This is pitch deck data, jumped from below 5% to above 13%, and then no plans to raise have jumped from around about 5% to 13%. And we're just finding that those that raised heavily in 2020, 21, early 22, and then don't have the portfolio performance to back it up. This is a brutal game. If you don't deliver that performance.
It was interesting chatting to Chris Milligan last night too about the number of UK VCs he's seen that are not now able to raise their next fund because of the performance of their 21 vintage portfolios. And this is exactly what we are always conscious of. You know, we're an early stage fund manager that wants to be here for the next 20 plus years. And so it factors into our decision making of what deals we can take on. And to your point, Don, we're high touch. So the amount of time we have to put into portfolio companies, we're very selective of making sure that's a good use of our time.
One of the founders on the mission said, do you think, given your history and this is, do you think you'll ever go back to building a company? I was like, mate, we are no different to you. We are in the fucking trenches. We have stuff that every now and then goes right. We have stuff that we think's going to work, but then doesn't work. We have disappointment. We have heartbreak. We have 4 a.m. starts. Like, it takes a lot of work and effort to build a VC fund.
I think it's forgotten. Like, this is a two-sided marketplace, and we've chosen to do it in 3 international jurisdictions. It's fucking hard.
It's quite funny, the perception of the founders have of investors, but the reality is, like, we're exactly the same. For the few that make it through.
Well, let's get into some charts. This is less a chart, more a four quadrants. Agency on the left, talent on the bottom, and then it's broken into 4 quadrants. So high agency, low agency on the vertical axis. Talent, low talent, high talent on the horizontal. So high agency, but low talent. The thing is saying, now that I go through, this is quite aggressive and maybe a bit unfair, is it?
It's a bit brutal, but probably because there's some truth in it.
Yeah. So high talent, high agency, that's the game changers. Talent, but low agency. So really talented, really smart, but low agency, don't take action. That's the frustrated geniuses. I agree with that.
Yeah.
This means a lot of entrepreneurs are actually frustrated geniuses because they see the world the way it should be, not the way it is. They can't get out and just break down the barriers that someone with less talent just goes and does, right? Because they don't overthink it. So low talent, low agency, cogs in the wheel. This I didn't think through.
If there's a takeaway, I guess it's that execution and action supersedes talent.
Absolutely. Yeah, there you go. Thank you, Aaron. This was a chart that came out from Carter, just that the healthcare sector is held up better than other VC sectors. So whilst the total cash raise has fallen significantly, fintech has fallen like 80%, whereas healthcare has only fallen about 40%. The number of rounds for fintech is down 60%, yet the number of rounds for healthcare is only down about 30%. So that's just an interesting, and hardware is actually doing much better than other things as well, which is interesting given a lot of people hate hardware. We've discussed it a couple of times. This was a chart that actually plots in Australia how much households are paying interest on their homes. And so going back to 2006, a fair amount of time, it's reasonably stable between, 12 to 18 billion. And then it started to fall, and then it's just rocketed from 10 billion to 30 billion in nearly 2 years.
Yeah, that's a sharp curve up.
And that's the problem in life, is the rate of change. So I'm still not sold that it's all going to be rosy, because that amount of money that's effectively pulled out of purchasing power going to interest, it has to hurt the economy a little bit, which is playing out in this next chart, which is the household savings ratio in Australia. And so household savings going back to 1996, it always has flipped between 8% and 0%. This is the percentage ratio. But what's interesting is that COVID, with all that money, the household savings ratio blew out over 22%. But then post that has been continuing to fall, and now we're coming to the zero line. And so it's just, again, those kinds of things. If that starts to go negative, the last time these things have gone negative were just before recessionary environments. And so if households are having to spend a lot more on interest and the cost of living, it's going to eat into savings, and then savings is going to ultimately hurt consumption, which is playing out a little bit in this next one. I'm on the board of a company called Venue Now. They release some insights, and the average budget for, this is a bit hard, I should zoom in. The average budget corporates are putting into their platform is down by 7%. Let me just expand this. That is so grainy, I can't even read it. For the listeners at home, the arrow's going down. What's happening? I've really outdone myself. What I know from the board meetings is the number of corporate events is down, and the budget of those corporate events is down. Yeah, I think we're starting to see some of the things.
Yeah.
And this is a chart from the US. This is the delinquency rate on consumer loans, and you can see that hit a low post-COVID, and then now that's been trending up. And what we can see from this chart, this goes back to 1987. Once it starts trending up, it tends to start to trend up until the recession has happened, and then the recession is over, and that's when it tends to start to fall. That's going to be interesting to see. This is less a chart. This is me in an info. For those at home, it's deep focus is like, what is that? Saturn?
Saturn.
There's an asteroid coming, and it's just got a little arrow that says one notification about to smash the deep focus.
Yeah.
Actually, no, it can't be me, because I'm not sure I ever get into deep focus.
It's just sitting in the asteroid belt of notifications.
This one is sort of what we've discussed in the past. So this is perspective. So today, it's a little chart that's down to the right. That looks like a terrible outcome. But if you zoom out today in the broader trend, like this year, as long as you're going up to the right, even if you have some bad days, bad weeks, bad months, never forget perspective.
Actually, this reminds me, we were chatting last night in the Airstream at Blue's Kitchen with the founders about work-life balance and mental health and these sort of things. But that concept of zoom out, this pressure to try and achieve balance in a day is just so microscopic and impossible. But if you zoom out I like Chris Milligan's perspective, it's, do I have work-life balance over this quarter? And it recognizes that we have to have these sprints. And yes, things might be going down, our charts might be going down to the right, but then we can balance it out if you zoom out. take a bigger time frame perspective.
My only concern with some of those discussions is like founders that have gotten through to the other side, who then recognize work-life balance and all of that jazz, is a bit like parents with 30-year-old children telling parents with 3-year-olds and 4-year-olds and 10-month-olds, you really need to prioritize sleep. You really need to prioritize balance. So I fucking can't.
Yeah.
The kid, right? And so it's the same with businesses. There's certain conditions and things when you give birth to a business and you've got this infant toddler business, you've got to be prioritizing it in order to get some momentum for the thing to survive. And then when it's in its adult phase and it's got its cash flow and it's got some systems and you've got some good corporate structure, you tend to be able to take more holidays. You tend to get interrupted less. I just worry sometimes of founders you've got to have work-life balance. If you're going to be a founder and you're going to build a business, you're going to have some shitty years of working 7 days a week, of being stressed out of your brain, and a small percentage of people survive that, and you're going to have to choose if you're going to be one of those percentages.
Yeah, 100%. And that's why I think zoom out. You've got to zoom out. And if you're treading water, you can't be having a Zen meditation moment. You're trying to keep your head above water.
I'm just going to have a little nap. Oh, I drowned.
Yeah.
I thought this is less charts. So this is a sign on a chair in London for Barbara, who was awful when hungry, but otherwise pretty solid.
I'm laughing. I need to share this with Maren. Maren has the hangries.
But then, only because he's changed the way newspapers really operated in London, and most people would say the world, and has made the world a far worse place. But an Australian export being Rupert Murdoch, who got married again for the 5th time. This was in The Shovel. Rupert Murdoch quoted as saying, "I see us spending many weeks together." Murdoch names the latest nuptials my favorite marriage so far this year. But Jack and I sometimes talk about it, like just the entrepreneurial energy, the hustle, the need for new things, new adventures, for some entrepreneurs never leaves. And 92 onto the 5th and soon to be 6th divorce. No, I've got no doubt.
Yeah. They were good shots. To that commentary of why do we do the Sharts, there's some good takeaways in there around corporate spending on discretionary items being down and consumer household discretionary spending being down. And this is why we focus on companies that are solving real problems. And it's a theme of the week over here in the UK. We've heard it from the corporate. Don't waste our time unless you're solving our biggest hair on fire problem. So there is relevancy.
And if your partner's named Barbara, just make sure she's not hungry. What are we looking forward to? Today's the last day of the mission. So I'm looking forward to really pushing the founders to make sure that they've got their action plans, their battle plans, the time in market. We're going to do some more sessions around lead generation and marketing automation and some of that more tactical stuff. So I'm looking forward to that.
Yeah, I'm looking, and also we're doing a bit of pitch feedback for them this afternoon, but hearing what they're going to do after the mission. Like, it's great to come over here. It's awesome that they're getting these wins and great customer engagement and everything else, but what tangibly are going to take back and making sure that they integrate what they've taken from this week back into business back home, rather than just getting back and getting caught up in the day-to-day. So I'm excited by that this afternoon.
Jack's excited for a nap.
No comment from the big fella.
Clearly there, mate.
You got to put your walking shoes on because we're leaving in like 10 to head off to see the trade commissioner.
I feel good.
Yeah, and you're leading the Adelaide crew. So I think Jack's going to be sitting him down and just pretending he's off to make a phone call and getting a quick shut eye.
What are you looking forward to, Jack?
Oh, just looking forward to spending the remaining time in London together. Looking forward to the group.
This is the least convincing. Favorite deck tomorrow night, Covent Garden. See the weather holds out.
Yeah, hopefully it's not raining. I'm looking forward to that.
All right.
Thanks, boys. Head downstairs in 10.